Well, hello, investors and traders. I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time, we ask ourselves what happened today and what does it tell us about the coming ones. Do the show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. As far as what happened today, it was give back day. Give it all back, right? Everything you did yesterday, you give it all back today. Right back down the other way. Big red bars today. They started higher, gave it all up, came back down, and never did recover. You had big gains in Europe, but they were going into those big price points that we've talked about. They hit them, they reversed, came back down. That was part of the reason I think that we saw weakness over here. As far as Asia was up big last night. They're down tonight, it looks like. Oil gets whacked again, down 2%. Copper down 2%. Silver down 3%. Gold down 2%. What is it all based on? Is on the dollar. Dollar up almost a full percent today. And bonds doing the same thing, up a full percent in its case as well. So a lot of gyrations after the Fed. A lot of this and a lot of that. And in the end, we're kind of right back where we started, and that is what is next. So let's take a look at the charts and try to make some sense of what we got here. Starting with the daily on the S&P 500. So you have essentially a takeaway bar. You come back underneath yesterday's low, 2042. You closed it today at 2041.89. So you come all the way back. That's essentially a bearish engulfing. But in this particular case, yesterday's high, 2076. You got the 2076.37. Yesterday's high was 2076.72. So you didn't quite get the engulfing because you didn't get to the high. Less volume, you come down, you're banging right back into this bar, which was the breakdown bar, and you wanting to stay over this swing point low, and you're back into it, testing into it. Now, on the weekly time frame, that's where it's more interesting. If we take a look at the weekly, here we're doing a lot more volume. And so as we come back in, the bar we're coming into is the high of the low, 1993.48. We traded to 1993.26 to start the week. So we trade into that price point, and now we're back over it. And we're probably going to have more volume this week than we've had lately, but it doesn't look like we're going to have enough volume to blow that out. So the key tomorrow is to not trade underneath there and stay into it. You don't want to stay into the big bar. You want to test into it, flip back around, and stay up here somewhere out of it. And so tomorrow, the big test is simply to stay above that area. And, hopefully, from a bullish standpoint, actually try to trade back higher. That's the S&P 500, and that's the way it looks as we come into quad witching, which is going to create some big turmoil come tomorrow. If we look at the Nasdaq, right? So the Nasdaq comes into the same sort of situation, right, where you come into the big bar on the way back. You're coming into this bar. You don't have the volume. If you flip this back, another bearish engulfing kind of situation here. If you flip this back, you got a long way to go to get back to that. Really, the test is this little range that's up here. And so the NASDAQ actually in a little bit better shape with respect to what it's testing into. Same thing here on the NDX. You come back. It's not quite a bearish engulfing. Again, range trading up here. Long way to go to get back to that swing point low. Russell. Now, the Russell has been the weakest of the group. Russell also tries to do a bearish engulfing, doesn't quite do it, does go over back under, has less volume. So you test up, you can't get over it. And the Russell was different than the others because it's been so weak, it was trying to do a bearish retest and regenerate lower. And if you take these two lows, and in this case we have let me see, 1, 2, 3, 4, 5. Yeah, it's actually this one. Trying to make sure I get the right one. So you can see those price points there. So as you come back up, you test in towards the top of that area. You don't quite get to the highs, but you do almost a full retest. And now you're trying to retest, and now you're trying to regenerate lower off that retest. So now the key case now is, do you regenerate lower or not? Now on the Russell, it looks pretty bad. In other words, you got an ABCD structure that is fairly large at this point, right? And if this were to actually propel back down the other way, right, this could actually go a distance. But let's go back to the S&P 500 and take a look at the ABCD structure potentially on the downside there, because here it's quite different. You had an ABCD structure here, right, and you trade down into this area and extend past it. Now you come all the way back up here, so you're coming from this point now to that high. That's not that different. So the ABCD structure is not that far down, more or less down into this area. If it projects lower, that's the way it looks. So yeah, you could get a projection down, but it's not as large as you would think probably off the top there. So that's the way the ABCD structure sets up. Now, you know, it could be exactly the opposite. Tomorrow's quad witching. We really don't know what's going to come out of it. We're trying to digest the Fed today, right? So, you know, assuming you turn this thing and go back the other way, you know, you could be looking at a test of these swing point highs. So you're at a point now where it can go either way, right? It's not clear here which one it is. Tomorrow you're going to get a lot more evidence of which it is, and given that it's quad witching and probably high volume associated with it, you're probably going to see whatever move comes out of this more or less stick. Now, what was bad today, of course, were these takeaway bars. That's not what you want to see after you just had a nice big run up off the bottom. If we move our attention over to Europe and we go to the DAX, all right? Now the DAX, we had talked about, the DAX was going to try to get into this big bar. Bottom of that bar, it goes right into it today, trades over it. So your price point there on the low was about 10,780. You trade into about 8. Let me see here, 10,829. So you trade over it, back underneath it. You did good volume coming into it, but nothing like the volume coming down. So the breakdown bar is going to try to push this thing back down. Now, if you remember here, we had a very high probability situation that this thing was going to bounce off this area because there was a swing point low over here, a swing point high that was broken, had gone more than 6 bars before the test. So the probability was very high that this thing would push up, and we thought it would push right into that, and that's what it did. Now the question is what kind of retrace do you get off of it? You know, do you get a small retrace, maybe back down into this gap area, maybe into to this little gap low, or do you get something larger, right, that brings it even farther down? Now, a small one that then turns, right, can take you back up to test the highs. And so just like our markets, the key is going to be what happens here. If you look in Asia, they had big bounces, but really nothing significant in most of those markets. If I look at the CACs, big bounce here, comes into a swing point low. I don't think there's anything significant here other than the fact that it's testing into the swing point low and turning. But the DAX seems to be the one that's really driving it. And what's it all about? Well, it's about currencies. So if we want to know what's next, we need to be able to read these currencies. FXE, we're looking at it on a daily basis here. Big bar up, gets over it. Today it comes back into it. The bottom of that bar is about 96. So 96 is probably the target when we look at this on the way back. We're trading at 96.73 on the low today, closed at 88. So another, a little less than 1% to get back down in there. If you look at this one on a weekly, remember we had a bearish retest in trying to regenerate lower, and that was off of this particular bar here. And so that spike up, my confusion here, I was trying to figure out why it looked this way. I'm on the FXF, so I'm looking at the Swiss franc. So my bad. Let me pull up the correct chart. I hit the wrong symbol here. Let me get the euro up, and then it will make more sense to me. There we go. It's deeper. That's what I thought. Okay, so here we go. 105.70. My bad. coming into it, right, we got to 105.94. So we almost got to that gap area. And this is the key area because, you know, does it hold the gap or does it trade back into the gap and maybe go after the lows again? I think that's really the key here is what do we get on the way back? Do we get deeper retrace or not? And if we do get a deeper retrace, right, then we're going to actually have something to work with to the downside. So right now it's just rolling over, but you know, I don't see anything that worrisome here because you've got the support right up underneath it. That's going to be the key area. Now, if that holds and the euro starts to turn, then that's going to put more pressure on the German market. German market looks to me like it does want to come in some, although it did attack it with decent volume today. So we should see either tomorrow or next week, we should see it try to hit it one more time. But I don't think the German market's going to be able to go up into that and take out that big bar. This flipping around and holding in this big bar here, because this, you know, once you get one of these big bars like this, they tend to hold for a while. And that range is there. And so my take is that, yeah, it could trade to the bottom of the range, but more than likely this time around it's going to trade into this area, and then you're going to hold this range for a while. If that's true, right, then the European markets can kind of hang in there and attack those highs again. If it doesn't end up that way, well, then it's a different story, and we'd have to reevaluate. But that's the way it looks here. If I go over and look at the dollar, the UUP, it was stronger because we had a big drop in the yen. And so this price point here is 25.73. We traded into the gap today, 25.78, and held it. Looks to me like this is extended about as far as it probably will, because you actually have the same sort of a, you know, bar here. That bar is going to hold price for a while. So I suspect we're going to see this drift back into this area, just like it drifted back in when it tried to test on the downside. Now, if the dollar, for whatever reason, does break out and starts to run higher, then you're going to see these equity markets have a real tough time. And it's going to be equity markets pretty much everywhere. And so if we see this start to break out and break over these highs, it's going to be a whole different ball game. And the reason for that is if you look over here on the weekly, that's going to be a breakout on the weekly as well, and then only the highs remain. And if this thing starts breaking highs, you're going to see a lot of consternation take place in equities, because it's definitely going to hurt the earnings of these various companies. So that's the way these charts are set up tonight. The strength in the dollar, of course, weighing heavily on anything commodity based. If we look over at, you know, say, let's just take a few of these, the silver market, you know, just whack down, testing the lows again. The oil market making new lows again. One of the things that's been a problem has been the junk bonds. Junk bonds got a big reversal back down. They actually had an under over with less volume. I suspect they're going to stabilize. I don't think that's where the problem's going to be. The problem's going to be in the dollar surging if these markets are going to take out these lows. Here's the gold market, 153, trades down to 150. On a weekly basis, this thing needs to find itself and get back up, because what it's done so far, it's done a bearish retest, and now it's trying to regenerate to the lows, the downside. If it can't hold in here and recapture this, then you're going to see another leg to the downside, and that next leg is going to be a pretty big one. You go down to, matter of fact, you don't even have a B point yet. We don't even have a B point. And so, you know, wherever this B point ends up being, that's a long bar on the way down. So tomorrow's going to be a big day for gold, for the equity markets, for all the reasons and points I've pointed out already. Quad witching, anything goes on quad witching. You just had the Fed do what they were going to do. You got to run up on the Fed decision. Now you got the takeaway on the very next bar. Tomorrow's a big day. Right now, looks like it's going to try to trade lower tomorrow, but I think it's a toss-up. I think it can go either way. That's it for tonight. Thanks for joining me as always. Take care of yourself. Tell a friend, tell two. I'm LA. This is and was your daily NeoTA wrap. Have a great one. I'll see you next time.